Hello, I'm Catalina with Homeownership SF, and I'm here today with Hillary Bird with First Republic Bank and Sandra Gates Anderson with the San Francisco Mayor's Office of Housing and Community Development. We're here to talk to you about the basics of refinancing a below market rate home in San Francisco. Homeownership SF is the collaboration of the HUD-approved housing counseling agencies in the city. These agencies are Asian Inc., Balance, the San Francisco Lesbian, Gay, Bisexual, and Transgender Community Center, the SF LGBT Center, as well as Mission Economic Development Agency, or META, and San Francisco Housing Development Corporation, or SFHDC. All the 5 member agencies are available to help you and to talk to you about finances or anything related to housing. They can help you navigate any of the affordable programs that the city offers. We also offer monthly workshops in particular for homeowners. Some of the topics include things such as property taxes or how to manage your homeowner association. Check out the schedule at homeownershipsf.org and you're welcome to join any of those free workshops. Welcome, Hillary and Sandra. And Hillary, please tell us in simple terms, what does it mean to refinance a home mortgage?
Hi. In a refinance, a new loan will replace your existing loan. A refinance typically reduces either loan terms or interest rate, and both options are great tools to save money over time, and you can apply those savings towards other long-term goals. Some homeowners refinance to access equity in their home, but these refinances must be approved by MOHCD in advance. There are advantages and disadvantages for refinancing. A refinance can be a great tool, so it's great to review your numbers with a lender to see if refinance makes sense for you.
What does home equity mean?
Home equity is the difference between the property value and the loans on the property. Equity is built over time. Each month you make principal and interest payments. The principal portion is applied towards home equity. And if your property value increases, this is also an equity building tool.
And how does a homeowner know if and when it's right for them to refinance?
It may not always make sense to refinance. For example, if you've had your mortgage for a long period of time, or if you have a low interest rate already, or if you plan to sell the home. These are things to consider if refinance makes sense. Important factors are cost versus savings. Lifetime savings for the new loan should be greater than the cost to refinance. There are other restrictions on other liens on the property that must be considered. Again, consult with your lender to see if refinance makes sense for you.
Thank you. And welcome, Sandra. Please tell us the specific rules about refinancing a below market rate home, and do BMR homeowners have access to their home equity or what they call cash out?
So generally the city will subordinate to the first mortgage refinance for a lower interest rate and or better loan term. The first mortgage loan must be a fixed rate mortgage. The owners must have paid their mortgage, taxes, insurance, and HOA dues on time for at least 12 months after their purchase. Owners must also be in compliance with MOHCD's annual monitoring. Now, in general, MOHCD does not allow cash equity withdrawals on BMR units. However, we may consider it for capital improvements, educational expenses, medical expenses, or funds required to implement a marriage dissolution agreement or domestic partnership dissolution agreement. If this is something that the owner has a need for, they should contact a housing counselor to assist them with a budget, providing the necessary documentation, and they should also work with their lender to help them submit this request package to MOHCD for approval.
So what is a subordination?
So a subordination as it relates to lending in a refinance transaction is when a junior lien holder goes back in junior position and allows the new first mortgage loan to move into first lien position. In order for a new loan to move into first lien position, all the other junior lien holders must agree to remain in junior position.
So how and when should a homeowner considering going through this process let MOHCD know?
So if an owner is interested in refinancing, they should first contact an approved lending officer. The approved lending officer will help them determine whether or not they actually qualify for a refinance. They'll help them structure the refinance transaction, and they, the approved lending officer, will submit the subordination request package to MOHCD for approval. Our refinance subordination request process can be found on our website.
So since refinancing is only approved with an approved lender by MOHCD, what does that mean? What is an MOHCD approved lender?
So our approved lenders are well-versed in MOHCD's homeownership programs. Each year, the approved lending officer must attend an annual training. They sign a participation agreement and they pay a fee to participate in our program. Owners who received any type of MOHCD assistance, including BMR and DOUBT, must work with the MOHCD approved lending officer if they wish to refinance and have MOHCD subordinate our lien or loans. The approved lending officer will assist the homeowner, as I explained earlier, with the refinance transaction, as well as structuring the loan, and they will submit the request to MOHCD. Our current list of approved lending officers are located on our website.
So as BMR refinances are allowed after 1 year of home ownership, what about if for our homeowners that hold maybe a DOUBT or any city cash loans? Are they allowed to refinance as well?
Yes, they may also be allowed to refinance. Some city programs have different rules regarding refinance. Therefore, we always recommend that owners check their promissory note and deed of trust before they contact an approved lender to apply for a refinance. And if their promissory note and deed of trust does not provide the specifics regarding refinance, then MOHCD's current policies apply.
Would they have to pay off these loans in order to do so?
So repayment of the city cash loans may be required on a refinance with an increase of monthly mortgage payment if the current appraised value or resale value of the subject property is sufficient to support a combined first mortgage and city cash loan, and if the borrower can obtain an affordable loan from a lender supporting the amount. It's best to keep in mind that the BMR DOUBT is needs-based program for the life of the loan, not just at purchase. If the owner has gained equity in their BMR unit, or if their income has increased, they may no longer need the BMR DOUBT. And if they choose to refinance, they may be required to repay the BMR DOUBT so that other first-time home buyers may benefit. However, their approved lending officer will be able to help them with that determination.
Hillary, as an approved lender that you are with First Republic, how is it that you help out with this process?
We assist homeowners from application to submission. There are minimal documents required for a refinance and much less than at time of purchase. Lenders are required to verify income, assets, and debt. We do this by verifying your last 2 years' tax returns, your 2 most recent pay stubs, and we obtain a current credit report.
Okay. And what are the typical lender fees?
Fees depend on the lender, and they're typically between 0 and 3% of your loan amount. There are fixed costs associated with a refinance, and the lenders must outline those costs at time of application. Certain lenders may allow you to roll the cost into your new loan, or apply a waiver, or simply give you credits towards those closing costs. So it's best to check with your lender to see what their program allows.
Okay, and what is the MOHCD fee for subordinating a loan?
There are fees associated, administrative fees associated with submitting a refinance packet. Currently, the fee is $668, and that fee does change every July 1st. So check with your lender. They will always verify the most current fee associated with a refinance submission.
What about fees for MCC holders or the mortgage credit certificate?
If the homeowner holds a mortgage credit certificate, they must apply for a reissued MCC, which is called an RMCC. That's typically done after the closing of the new loan because you need paperwork from the old loan and the new loan to submit an RMCC application. The fee is currently $801, but that may change every July 1st. So check with your lender. They will always quote the current fee associated with the RMCC submission.
Okay. Any other words of wisdom that you may want to share with homeowners thinking about this?
Our homeowners should know the lenders are here to help you with a smooth refinance. If you have questions and you simply want to run numbers to see if refinance makes sense for you, please reach out to any of the approved lenders. We're here to help.
Thank you. And Sandra, do you have any other last words of wisdom for us?
Yes, I recommend that homeowners that are interested in refinancing be patient. The refinance process can take some time, but the end result of obtaining a lower interest rate and or better loan term is rewarding. I also recommend that homeowners capitalize on the various resources available on our website, as well as work with our approved lending partners and Homeownership SF. And Catalina, I want to thank you for taking the time to interview us today. And I hope homeowners find this information valuable.
Thank you. And thank you both. We appreciate you being here and your time. I'm going to go ahead and share some of the resources we just talked about that will be good for any homeowner thinking about it to look at. The first one is the Mayor's Office of Housing and Community Development website, which is sfmohcd.org. Their website includes the list of all of the approved lenders. We encourage that you call at least a couple of the lenders so that you can find one that is the best fit for you. Any of the lenders there will be able to talk to you about any of the eligibility requirements, such as credit or income. They can also give you an estimated cost of refinancing or what your future payments are going to look like. And some of the questions that you can ask a lender would be, what is my interest rate going to be? Or what would the fees be? Or what do the payments look like? Another great resource is the Consumer Financial Protection Bureau, or the CFPB. And last but not least, we strongly encourage that you reach out to a housing counselor. The housing counselors are there to help you. They can help you prepare for the process and just navigate from beginning to end. If you already have a housing counselor that you worked with when you first purchased your home, please go ahead and call them again. They will be more than happy to help you. If you don't already have a housing counselor, contact Homeownership SF and we will connect you with one of our housing agencies, Asian Inc., Balance, the LGBT Center, Meta, or SFHDC. You can reach us by emailing us at info@homeownershipsf.org, or you can call us at 415-202-5464. Thank you for watching.